Hey traders, today I was able to lock in about $1,400 in profits with two trades. One of them was a long trade with the stock ENVB. On that trade I made $376 in profits, and the other one was a short trade that I placed in my TradeZero account and that I also alerted to the Market Master group, and that trade ended up being a solid winner of about $1,100, bringing my total to just over $1,400 for the day. You know the drill. In this video I'm going to break down these trades, talk about my thought process, and I want to cover a very important topic in this video about having a daily profit goal and what it takes to achieve locking in an average of $1,000 in profits per day. Now before we get to that, let's go ahead and break down the WLGS trade. This was again a short trade that I placed early this morning at the market open. If we take a look at the morning alerts here for the team, I posted at 9:36 a.m. taking a short position on WLGS into this gap up / opening pop. These setups tend to not hold above pre-market highs for long, and gap ups have been getting weaker and weaker over the past few weeks, looking for a fade back under 2 to lock in profits. At the time it was trading at $2.39, and this trade was a simple case of taking what the market has been giving us. Lately we've seen these stocks gap up in pre-market, spike a bit at the market open, and then fade back down. And what I've noticed from time and time again tracking these symbols and tracking these types of setups is the fact that these stocks that run higher and higher and higher, and they're at their pre-market highs basically at the market open, tend to spike up briefly at the market open, have a false breakout above their pre-market highs, and then fade back down. That's kind of why I was overall bearish on this trade and why I decided to short it. And I know I've mentioned this in a few of my recent videos, but this is a really good time to emphasize the importance of tracking data for the setups that you trade. If you're like me and you trade stocks that are gapping up over and over, it's really important to understand what stocks that are gapping up tend to do at the market open or tend to do within the first couple of hours after the market does open. For example, you can track things like how often they break above their pre-market highs, how often they close above their opening price, how far they run from their opening price to their highs. Although it's not going to give you a perfect number to use for your trades, you can find out what this setup is going to do on an average day, and you can use that statistical data to then help you improve your entries and your exits for your trades. All of that being said, I used the past data that I tracked in these types of setups to find out that this was a good short opportunity as it was having this false breakout above these pre-market highs. So I alerted the team, I took a small short position, and just like I was looking for with the alerts, it ended up fading under 2. I took most of my profits as it pulled back under $2 per share. It ended up fading down into the 180s and actually cracked under 180 before popping back up over 2. But I was out and locked in all of my profits before that even happened. So the next trade that I placed today that was a $376 profit for me was the stock ENVB. ENVB was a big gap and go this morning. We could see it had a gap up from the previous day's close of $1.52 up to an opening price today of $2.15. And then at the market open, it ripped right back through VWAP above those pre-market highs and pretty much trended higher and higher and higher throughout the rest of the morning. So in the Market Master group, this was one of the stocks that we posted the opening range breakout level for. We posted the breakout level at $2.26. The reason for that, of course, is because that is the high of this opening range here, 226. If we go ahead and draw that line, that is the opening range breakout level that we're looking for. So if you were trading that breakout, you would want to be buying into this breakout zone up here. And more importantly, what you would be doing is you would use the low down here of $2.02 as your risk level. So that way, if this does happen to have a quick false breakout and come back down and then dumps lower and lower and lower, you're going to be managing your risk and you're going to be stopped out after it breaks down below that morning low. Okay, so I missed the opening range breakout trade. In this case, I was a little bit more focused on my short with WLGS. In fact, I actually ended up chasing this a little bit in the sense that I didn't actually buy until this was over $3 per share. But to kind of validate my trade here a little bit, I want to say that it's not necessarily chasing if you have a trade plan in place and if you're still planning on managing your risk. Chasing happens when you're buying into a stock as it's spiking up with no real plan or with no real goal of that trade. So that being said, the reason that I bought into ENVB over $3 per share is because if we take a look down here at the daily chart very quickly, we can see the $3.20 area was a bit of daily chart resistance. So what I noticed was that as it was breaking above that level, it started to pull back into that past resistance level and turn it into a level of support. Once I noticed that, I took a small position in the 320s, and what I did was I used the low of this dip here. If we take a look at this red candle, that cracked actually back below that $3.20 level. The low down here was exactly $3. So I was buying in the 320s, and I knew that if it cracked back below that $3 level, that would also be a move below the VWAP, and that would be two bearish signs, a lower low and a break below VWAP, that would tell me it's time to get out of the stock. So I had a very small risk on this trade, especially because I had a small position. I didn't have a crazy profit on this, of course, either, but I was able to lock in $376 on this trade, while I was really only risking a little bit over $200. So all in all, it was another solid day of trading, locked in a little over $1,400 in profits. And now, just to kind of finish up this video, I want to talk about what it takes to average $1,000 in profits per day from day trading. First and foremost, if you are a newer trader, you shouldn't even be shooting for a goal that big. That might sound a little bit weird because obviously we're all in the market to make as much money as we possibly can, but if you're someone that's new to the market, you should start off with a smaller goal, maybe trying to make an average of $50 per day, $100 per day, even $200 per day. And once you can start consistently doing that, that's when you start to scale up to larger position sizes, you start to take on more risk, and you can start to potentially average $1,000 in profits per day. Okay, but in order to reach that goal, let's just say $1,000 per day, it's important to start tracking data for the trades that you actually take. Let's go ahead and put this column here as the winning trades. These are our winners, and these are going to be our losers. So if we're putting in our data after every trade, and let's just say we have a winning trade here that profits 6.7%, and we're just going to put in a bunch of numbers here, 5.8%. This one was a little bit bigger, we'll say 12.2%. Now what we can do by tracking this data is we can go ahead and select all of our winning trades here, and down at the bottom it's going to tell us the average return for a winning trade. On average, our winning trades tend to be 7.66% in this case, and if we take a look at our losing trades, an average losing trade is 9.2%. The average for all of these trades collectively with winners and losers factored in is a loss of 0.77%. This information can tell you a lot about your trading. Obviously, you want this to be an overall positive number, showing you that with your winners and losers factored in, you're still profitable at the end. And at that point, you could start to see what it's going to take to reach that daily profit goal. For example, sticking with the same $1,000 in profit for our daily goal, if by tracking our data, we find out that we have an average return per trade of, let's say, 3.5%, if we divide 1,000 by our 3.5% average profit, that's going to give us 28,571. This is the number that you would need to invest with this percentage return in order to make this amount of money. Now that doesn't mean that you should just be going into one single trade with that $28,000 hoping to get that 3.5% return. It just means that, say for example, you place 5 or 6 trades per day and each trade is about $5,000 to $6,000. That's going to put you right in this range, and if you can average with winners and losers overall a 3.5% profit from those 5 or 6 trades with, again, this much invested overall, that's going to average out to about $1,000 per day. Okay, so I know this kind of made it seem a little bit complicated, but at the end of the day, you just want to track data for your trading to give you an idea of how well you're performing. And when you start to see that overall you're consistently profitable, you can slowly scale up your positions to larger and larger sizes until you're reaching your daily $100 goal or your daily $200 goal, or in this case, your daily $1,000 goal. Alright, so hopefully you found some value in this video. If you did, please make sure to give it a like and subscribe to the channel. And if you want to come join us in our trading chat, we post daily alerts, detailed trade plans. You can check out our live scanner streams to watch the same scanners that we're watching in real time. All of these are very, very important tools and very helpful for anybody that is serious about trading. You can get started down at the link below in the description. There's going to be a free week when you sign up, so that way you can try it out before paying anything. And yeah, thanks again for watching. I hope you enjoyed, and good luck with your trading.